It's very interesting to note that Sam Bankman-Fried, who has either committed gross negligence or outright fraud, he didn't like Bitcoin. He didn't like it. And why didn't he like it?
Cathie Wood is back with insightful updates on the economy and on crypto as well. The big news in the crypto space remains the issue of FTX and its founder Sam Bankman-Fried. Cathie Wood gives us more revelation on the matter, which is important towards predicting the future of cryptocurrencies. This interview touches a lot of pressing matters, so be sure to watch until the end. And if you're not subscribed to the channel yet, do that and never miss out on an update.
I think what we're learning because of FTX is how much more important fully transparent, decentralized networks will be to financial services going forward. FTX, Celsius, 3AC were all closed networks, opaque systems. You couldn't see what was going on. And what happened as they were going down, the people who were on the fully transparent distributed networks were able to get out scot-free. They saw what was going on. There were margin calls for those who were over-leveraged, but the system worked. It didn't skip a beat. Those other companies went out of business. It's a little bit like 0809. The old financial world is very opaque, not transparent. The new world that we're entering, and we do believe DeFi will actually get a boost coming out of this because it's so obvious now. Decentralized and transparent is the way to go. Those networks didn't skip a beat. All of the transactions were completed. And there are all kinds of metrics saying they're getting stronger now. It's very interesting to note that Sam Bankman-Fried, who has either committed gross negligence or outright fraud, he didn't like Bitcoin. He didn't like it. And why didn't he like it? It's decentralized, it's fully transparent, and he couldn't control it. He was trying to control the crypto world, master of the universe. And that was a recipe for failure. It's been most unfortunate because so many people have been hurt because of it. But I do think the big lesson, and even the newest SEC commissioner is saying, you know what, we really have to double down on this idea of decentralization and transparency and help to propagate this new world with the right kind of regulation. And it's not like they have to change regulations. As Brian Armstrong says at Coinbase, we don't need new regulations. We need clear regulations. And we certainly need more clarity from Gary Gensler at the SEC. And the other thing we need, I would submit, is we would have saved a lot of people from some of the catastrophe that FTX has presented them with something like a Bitcoin ETF, a regulated. Instead, a lot of people went offshore and then got carried away with it. So I think the SEC deserves some blame for what has gone on as well.
Cathie alleges that Sam Bankman-Fried had never liked Bitcoin because he needed a cryptocurrency that was centralized and could be influenced like he did with FTT tokens. This opens up other issues that are important as we press for regulations of cryptocurrencies. The question is, won't regulation translate to cryptocurrencies being more centralized? And if cryptocurrencies are centralized, that would cause more human interface. Won't this increase of human interface lead to a repeat of what happened to FTX? SBF had a plan of integrating rules into DeFi smart contracts that would implement the guidelines set by regulators. This proposal did not go well with members of the crypto community. Several prominent crypto-focused accounts on Twitter speculated that Sam Bankman-Fried is secretly lobbying for the bill's passage that would see regulatory controls integrated in DeFi. One tweet that became popular read, FTX is spending money to push a law through Congress that may force DeFi protocols to operate like centralized exchanges. Scott, the monogamous founder of DeFi Pulse, tweeted. Another tweet said, SBF is blatantly trying to kill DeFi and decentralization in general. Zfram of the NFT marketplace SudoSwap also tweeted. SBF, FTX, and Alameda have repeatedly demonstrated that their sole purpose is to extract as much value as possible out of crypto with zero regard for its development. Cathie also believes that another issue that enabled the FTX scam was the fact that there are no spot Bitcoin ETFs. This has been confirmed by the US Securities and Exchange Commission. According to a top official of the SEC, who spoke at the ICI Global Asset Management Asia Forum in Singapore, there are a lot of applications, but none have been granted for Bitcoin ETF to be traded. A decision by the SEC to allow the spot Bitcoin ETF offered by Cathie Wood's ARK Invest and the crypto investment product firm 21 Shares US to trade on Cboe Global Markets has been delayed until January 27th.
Equity market's not going to be surprised, and even the fixed income market's not going to be surprised. The yield curve, so the difference between the 2-year and the 10-year Treasury yield, is over 80 basis points, 0.8%. This has not happened since the 80s, the early 80s, when Chairman Volcker, was taking a sledgehammer to inflation, an inflation problem that had built up over 15 years. This inflation problem built up over 15 months. And instead of increasing interest rates twofold, 10 to 20%, which is what Volcker did, Chairman Powell has taken interest rates up 16-fold. Again, never seen that before. And I do believe that the surprises now are going to be on the low side of inflation expectations, dramatically so. We believe that inflation will drop below the Fed's 2% inflation rate sometime next year. And the pipeline is telling us that. Commodity prices, inventories, which are overwhelming and causing all kinds of discounts. And the bond market itself, whenever there's a yield curve inverted, it is saying, okay, growth is going to disappoint, or inflation is going to be lower than expected, or both.
A rise in interest rates worries Wall Street, causing bond yields to fall. Last week, the 10-year Treasury yield fell 9 basis points to 3.42%, while the 2-year rate was down 10 basis points to 4.264%. In its December meeting next week, the Fed is widely expected to increase interest rates by 50 basis points after 4 consecutive 75 basis point increases. There's concern among investors that the pace of rate hikes may lead to a recession in the US economy. In a note to clients, Tom Essay of the Sevens report wrote, "The economic outlook is deteriorating, and if that continues, it will support the long end of the curve," adding that a widening spread between 2-year and 10-year notes foretells a significant slowdown of growth, but no relief from the Fed. Investors weigh inflation data ahead of the Fed meeting as US stocks lose for the second week in a row. Initially, hopes were up in November that the markets were recovering, but it's become apparent that the inflation crisis is not over yet. Thanks for watching. We hope to see you again, so be sure to subscribe to the channel and give this video a thumbs up.